The objective for this standard is to ensure that an entity's financial statements contain the disclosures necessary to draw attention to the possibility that its financial position and profit or loss may have been affected by the existence of related parties and by transactions and outstanding balances with such parties. This standard has 4 uses. First is identify related party relationships and transactions, and it is accept state-controlled entities. And the second is identify outstanding balances between the entity and related parties. The third uses is to identify the circumstances in which disclosure of the items in the first 2 points above is required, and the last uses is to determine the disclosures required. What is the related party? Related party can be direct and indirect through one or more intermediaries. The related party can control or can be controlled by the entity. This includes parents, subsidiaries and fellow subsidiaries. Second, the related party can be defined as a person has an interest in the entity that gives it significant influence over the entity. Second, the related party can be defined as a person has an interest in the entity that gives it significant influence over the entity. Fourth, the party is a member of the key management personnel of the entity or its parent. Fifth, the party is a post-employment benefit plan for the benefit of employees of the entity, or of any entity that is a related party of the entity. What is related party transaction? A related party transaction is a transfer of resources, services or obligations between related parties, regardless of whether a price is charged. What is key management personnel? Key management personnel are those persons having authority and responsibility for planning, directing and controlling the activities of the entity, directly or indirectly, including any director, whether executive or otherwise, of that entity. The key management personnel can be divided into 5 categories. First is short-term employee benefits. Second is post-employment benefits. Third is other long-term benefits. Fourth is termination benefits. Fifth is share-based payment. If there have been transactions between related parties, an entity shall disclose, at a minimum, disclosures shall include first, the amount of the transactions. Second, the amount of outstanding balances. Third, provisions for doubtful debts related to the amount of outstanding balance. Fourth, the expense recognized during the period in respect of bad or doubtful debts due from related. The disclosures required by paragraph 17 shall be made separately for each of the following categories. 1. The parent. 2. Subsidiaries. 3. Associates. 4. Other related party. Examples of transactions disclosed with related parties are 1. Leases. 2. Rendering or receiving of services. The effective date for an entity shall apply, standard for annual periods beginning on or after October 1, 2006. What is revenue? Revenue is the gross inflow of economic benefits during the period arising in the course of the ordinary activities of an entity when those inflows result in increases in equity, other than increases relating to contributions from equity participants. Body text. The effective date of MFRS 15 is year of 2018. Basic principles of MFRS 15 include identify the contract, S, with a customer. Determine the performance obligations in the contract. Determine the transaction price. Core principle of MFRS: the entity recognizes the income to reflect the amount of goods or services that are promised to the customer. An entity shall recognize an asset from the costs incurred to fulfill a contract only if those costs meet all of the following criteria. The costs relate directly to a contract or to an anticipated contract that the entity can specifically identify. The costs generate or enhance resources of the entity that will be used in satisfying performance obligations in the future. The costs are expected to be recovered. Time flies, which is the entity shall disclose qualitative and quantitative information about all of the following: contract balances, including the opening and closing balances of receivables, contract assets and contract liabilities. Revenue recognized from contracts with customers, including the disaggregation of revenue significant judgments, and changes in judgments, made in applying the requirements to those contracts. MFRS 15 5-step model: 1. Identify contracts with customer. 2. Identify separate performance obligations in the contracts. 3. Determine the transaction. Depending on the contract, promised goods or services may include, but are not limited to, the following: include sale of goods produced by an entity. Resale of goods purchased by an entity. Performing a contractually agreed upon task for a customer. Issue date of promulgation of clarifications to MFRS 15, June 16, 2016. Issue date of effective date of MFRS 15, October 28, 2015. Licenses of intellectual property may include, but are not limited to, licenses of any of the following: software and technology, motion pictures, franchises, patents, trademarks and copyrights.